Every 15 years, the same financial system wipes out millions of ordinary people and calls it a correction. But it's not an accident. It's a reset. A bubble reset pattern that has quietly transferred wealth from the middle class to the top for more than a century. 1929, 1987, 2000, 2008, 2020, and it's happening again right now. The players change. The rules don't. Because the system isn't broken, it's designed this way. If you've ever wondered why every crisis leaves billionaires richer and everyone else poorer, this isn't random. It's mechanical, predictable, repeatable. A four-phase pattern built into the structure of modern finance itself, inflated by debt, fueled by greed, and detonated on schedule. Today, we're going to break that pattern open, piece by piece, and see exactly how the same system destroys the middle class every 15 years and how it's setting up to do it again. Every bubble starts with a story, a narrative so powerful that it feels like truth. In the 1920s, it was a new era of prosperity. In the 1990s, it was the internet will change everything. In the 2000s, real estate never goes down. In the 2010s, tech will disrupt everything. And in the 2020s, it's AI will make everyone rich. Different slogans, same psychology. The pattern begins when credit expands faster than real productivity. Banks lower standards. Governments encourage borrowing. The Federal Reserve, always the enabler, floods the system with cheap money. The result? Prices rise, not because things are more valuable, but because money is cheaper. That's phase one, illusion of growth. Everyone feels richer, on paper. The middle class sees their home values rise, their portfolios grow, and they start to believe they've finally made it. But it's not wealth. It's leverage. In 1929, margin debt hit historic highs, investors borrowing 90% of stock value to buy more stocks. In 2008, mortgage debt exploded, people borrowing 100% of home value to buy second and third properties. In 2021, margin debt, crypto leverage, and speculative call options hit all-time records again. Every bubble begins the same way. The illusion of easy wealth built on borrowed money. Once the illusion is strong enough, the insiders begin their quiet exit. They don't warn you. They signal, but you're not trained to see it. Look back. 1928, corporate insiders sold stocks at record levels. 2006, hedge funds started shorting subprime mortgages. 2021 to 2023, tech CEOs like Bezos, Zuckerberg, and Musk sold tens of billions while retail investors were still chanting to the moon. They were in phase two, extraction. They create the bubble, then sell the top to the crowd. While headlines scream about record highs, the smart money quietly converts assets into cash. They're not timing perfection. They're reducing risk before the implosion they know is coming, because they built it. Meanwhile, governments play their part, cutting rates, passing stimulus, fueling more leverage. Because when the illusion fades, the machine stops, and the machine must never stop. So they pump until the system can't absorb another dollar of fake growth. That's when phase three begins, the implosion. Every bubble ends the same way, suddenly, and then all at once. 1929, Black Thursday. 1987, Black Monday. 2000, dot-com burst. 2008, Lehman collapse. 2020, pandemic panic. Each time, the trigger looked different. The outcome didn't. Credit freezes. Liquidity vanishes. Margin calls ripple through the system. And the same middle class that thought they were investors realizes they were liquidity providers, the exit door for smarter money. The public loses everything, again. Retirement accounts evaporate. Housing equity disappears. Wages stagnate while costs soar. And every 15 years, the same phrase returns to mainstream media. No one could have seen this coming. But someone always did. Here's where the cycle completes itself. While the middle class is paralyzed by fear, the insiders deploy cash. They buy assets at fire sale prices, using the liquidity extracted during phase two. In 1932, the Rockefellers and Kennedys bought entire industries for pennies. In 2009, private equity firms scooped up foreclosed homes by the thousands. In 2020, billionaires doubled their wealth while small businesses disappeared. This is the bubble reset pattern, a built-in mechanism that turns every crisis into a transfer of ownership. The cycle resets, wealth consolidates, and the machine restarts, fatter at the top, emptier at the bottom. And the timer begins again, roughly 15 years to the next reset. We've seen the structure. Now we need to see who built it, how they control it, and what stage we're in right now. Because if history holds, and it always does, we standing at the edge of the next reset. Next, the architecture of the bubble machine, the system behind the pattern. Every time a bubble bursts, we're told it was an accident, a sudden market panic, an unforeseen event. But when you trace the money, really trace it, you find the same fingerprints again and again. Behind every so-called crash is a pattern. And that pattern doesn't start on Wall Street. It starts in Washington. Because every 15 years, the system resets itself. Not by coincidence, not by fate, but by design. Let's rewind to 1987. The U.S. market collapses 22% in a single day, the worst drop since 1929. They called it Black Monday. Millions lost everything overnight. But behind the chaos, the same elite class quietly positioned themselves. While news headlines screamed economic disaster, they were already buying the dip, using money freshly created by the the Federal Reserve didn't panic. They acted. They cut rates. They printed liquidity. And in doing so, they saved the system by inflating the next bubble. That's the secret most people never see. Every rescue creates the next collapse. Every bubble follows the same mechanical loop. Cheap credit fuels risk. Asset prices explode. The middle class joins late. The insiders exit early. The crash wipes out everyone else. And the government saves the system by starting the cycle again. That's why it always feels like déjà vu. It's not just history repeating. It's the same machine, running the same program. Look back at 2000, the dot-com bubble. The internet was the future. Everyone knew it. But the elites knew something more. They knew when to sell. Venture capitalists dumped worthless tech IPOs onto retail investors. Billionaires cashed out. The market crashed. Trillions evaporated. And within a year, the Fed cut rates again. Cheap money flooded the system. The next bubble began. This is the reset pattern, a controlled demolition every 15 years. And each time, the middle class becomes a little weaker, a little poorer, a little more dependent on debt just to survive. Let's map the timeline. 1971, the U.S. leaves the gold standard. The era of unlimited debt begins. 1987, the first modern crash under pure fiat money. 2000, the dot-com implosion. 2008, the subprime meltdown. 2023 to 2026, the next reset window. Every 15 years, give or take, the same formula runs its course. And if you look closely, 2025 lines up perfectly with the pattern. Why 15 years? Because that's how long it takes to inflate and then destroy a bubble big enough to reset the entire economy. It takes a decade of greed, then a few years of fear, then 1 year of destruction. Every single time. The pattern always begins with hope. Politicians promise growth. Central banks promise stability. And the media tells you this time it's different. Rates go down. Credit expands. Money flows. Everyone feels richer. But it's not real wealth. It's borrowed illusion. You're not richer. You're just deeper in debt. The top 1% knows this. They understand that cheap credit equals controlled inflation. They use that liquidity to buy hard assets, land, gold, stocks, companies. Meanwhile, the middle class borrows for houses, cars, and lifestyles they can't sustain. That's the engine of the bubble, and it's powered by your optimism. Once the bubble is inflated, the elites begin the second stage, risk transfer. They package bad loans into safe investments. They sell inflated stocks to pension funds. They push retail investors to believe the market always goes up. You've seen this movie before, from the mortgage-backed securities of 2008 to the SPAC boom of 2021 to the AI stock mania of today. Every time, the insiders are offloading risk onto the public, while the media keeps cheering by the dip. Trust the system, because that's their job, to keep you distracted until the exit door quietly shuts. When the timing's right, when the middle class is fully invested, when debt levels are unsustainable, when inflation becomes political, the reset begins. Rates rise. Liquidity dries up. Credit defaults start. And within months, everything that looked like growth reveals itself as a mirage. The system doesn't fail. It resets. It drains the middle class to refill the pockets at the top. This is the quietest phase, and the most profitable one. After every crash, while the public panics and sells, the elites buy everything at 50 cents on the dollar. In 2009, BlackRock, Vanguard, and private equity firms accumulated trillions in distressed assets, foreclosed homes, bankrupt companies, undervalued stocks. It wasn't an accident. It was the plan. The same people who inflated the bubble now own the remains of the collapse. They don't fear crashes. They depend on them. Once the middle class is drained, once inflation cools, once confidence returns, the cycle restarts. New stimulus, new cheap credit, new technological revolution to sell to the public. And the machine keeps turning. That's why every generation gets the same story in different packaging. The new economy, 2000. The housing boom, 2008. The AI revolution, 2025. Different headlines. Same pattern. Same outcome. It's not one person. It's not one conspiracy. It's a systemic structure built to protect capital at the top. Think about it. When markets crash, who gets bailed out first? Banks, corporations, hedge funds. When was the last time the middle class got a bailout? You didn't. You got inflation. You got layoffs. You got tightening and austerity. That's how the system maintains control, through planned instability. Because chaos isn't a bug of capitalism, it's a feature. Here's the harsh truth. The bubble reset pattern isn't hidden in some secret document. It's public. It's just disguised as policy. In 1987, Greenspan's plunge protection team. In 2008, quantitative easing. In 2020, unlimited stimulus. Each policy is sold as saving the economy. But what it really saves is the hierarchy. And each time, the middle class foots the bill through inflation, higher taxes, and debt that never disappears. That's not mismanagement. That's design. The most powerful part of this pattern isn't economic. It's psychological. The system doesn't just manipulate markets. It manipulates beliefs. They make you believe home prices only go up. The government will protect your savings. Inflation is temporary. Debt is normal. Every lie keeps you playing the game long enough for the next reset. It's a mirror, reflecting the illusion of prosperity back at a population living paycheck to paycheck. And when that mirror breaks, when the next crash hits, the middle class will once again discover that their wealth was just paper numbers held up by leverage and hope. That's the reset moment. The moment when illusion meets math. If history continues, and it always does, the next major implosion won't come from where everyone expects. It won't start in stocks. It'll start in sovereign debt, the one bubble that can't be bailed out. Governments are borrowing trillions at higher interest rates. They can't print their way out forever. Once investors stop believing in risk-free bonds, the entire financial system resets. That's when the dominoes fall, currencies collapse, credit markets freeze, global trade halts, emergency digital currencies are rolled out to restore order. That's not prediction, that's precedent. Because every reset has the same sequence. Crisis control consolidation. We're entering the control phase now. Here's how the next reset completes itself. 1. Inflation creates panic. 2. Debt collapses the system. 3. Digital money restores order. 4. Freedom becomes programmable. That's the end game. Not chaos, but controlled equilibrium. They don't want a destroyed economy. They want a managed one. One where volatility is planned, crashes are timed, and recovery is owned. That's how you destroy the middle class. Not with bombs or riots, but with financial architecture. There's always a small group who sees it before the rest. The few who understand that crashes aren't failures, they're resets. They don't panic when markets drop. They prepare when markets rise. They move into real value, assets that survive the reset. They don't play the game. They study the rules. Because once you understand the pattern, you stop chasing bubbles and start positioning through them. Here's the truth. You can't stop the pattern, but you can stop participating blindly in it. You can step outside the illusion, build real assets, own what you understand, invest in skills that can't be inflated away. The elites play decades ahead. You can too, if you stop reacting and start anticipating. The difference between being destroyed by the reset and surviving it is simple: awareness before collapse. Right now, we're in that quiet moment before the music stops. Everything feels stable. Markets are rising again. Confidence is high. That's how it always looks, right before it isn't. Remember, in 2007, the world was booming. In 2008, it was burning. The difference was 12 months and one blind spot. Don't be the blind spot this time. So when you hear politicians say, the economy is strong, remember, they said the same in 1929, in 2008, and right before every collapse in history. When you see billionaires selling stocks while telling you to buy, remember, they've read the pattern too. And when the next crisis comes and the system resets again, don't ask why it happened. Ask who it happened for. Because every 15 years, the story repeats. Different technology, different headlines. Same result, the same system, the same pattern, the same victims. And until the middle class learns the rule of the game, they'll keep losing to players who wrote it. It's not a crash. It's a collection.